Hi, this is Jack from Alpha Charts with a state of the market video. Today is December 18th, 2021. Before we get started, this video is for informational purposes only. These are not recommendations to buy, sell, or hold any stock or security. I may hold positions in some of the equities mentioned. Know your time frame and risk tolerance. All right, so let's get started. SPX. It's funny. If you go to a weekly chart, we were down 2% for the week. But and if you look at the weekly chart, it looks like a consolidation, which it kind of is, but very, very wide ranging bars. Okay, so price action is loose, especially seen on the weekly. On the daily chart, well, you have price now underneath, declining moving averages. They haven't crossed quite yet, but they may next week if it continues lower. You have this again consolidation pattern, right? Maybe it's just consolidation, maybe it's a successful retest, maybe it's a higher high, maybe some kind of inverse head and shoulders pattern that's being created here. I mean, we won't know till next week, if this kind of turns back up and then again, needs to break out. But with everything said and done, it's been a very tough week, especially for growth names. This day right here sucked me back in, and I got just totally, stopped out right here on everything I tried, pretty much. So, so SPX. I mean, again, maybe this is some kind of inverse head and shoulders starting, but I wouldn't put any real credence in that because the price action is so loose. This market has a lot to prove, and there's no place to manage edge here in S&P. At best, it's in the range. Looking at RSP, again, I like the equal weights a little bit better. And if you see, it's now closing below this particular area. We'll call it maybe right at it, right? It says it's kind of like right there. I could do this really. So if these continues lower, good chance we're going to go back and retest this area. And this 152 area has always been important. Maybe we can extend that to the low over here to 151.57. That may be more legitimate. But this area is the part that's got to hold. If not, good chance we're going to revisit 145. It's a pretty good distance away. Of course, there's this head and shoulders pattern that's kind of trying to form, and that being the neckline. So that's a big deal also. So RSP, looking weak. If that, especially continuation lower. That's what you're looking for. Any continuation lower, and it's got a pretty good drop. I mean, that's got 3.5% drop to this next level of potential support. And that, doesn't sound like much, but if you're in any kind of growth names, that could be huge. Looking at the Qs, this is a head and shoulders top that is trying to confirm, but has not, right? Everyone sees this. It's pretty obvious. But we're right there. And so forth, this 381, 50-ish or so has held. And so that's good. Any weakness though, and I think that kind of confirms this little head and shoulders top. And then I think 353, 354 is a likely target for that. Equal weight Qs. Again, this is a kind of a bigger head and shoulders top on the equal weights. Let's zoom out here. And this is the line of best fit. And you see really on closing prices, why I chose this particular line right here. Prices below it. And looking like it wants to go down. Is this the right shoulder? I don't know, maybe. I mean, it did come back up here a little bit, not perfect or nothing like that, but I don't think markets are ever perfect. So maybe it's the head and shoulders. If it breaks here, that's a pretty big, and again, beyond the equal weight, that's going to be a pretty big deal, right? So we're watching this 81.50-ish, maybe $81. If $81 breaks on the equal weight Qs, I think that the market has a much broader sell-off in store. If it holds and starts to base out here and moves higher, I think that it's a save. It's a stick save, right? IWM, again, same place, precarious, right? We're back into this precarious place. So far on Friday, it held, right? Held where it had to. I think 209-ish is the place, maybe 208-ish is the place that has to hold. But the trend is lower, and there's a false breakout. Again, back in this range. Range is going on for almost a year now. Again, if it breaks out of this range and breaks lower, that's a big deal, because it had every opportunity to break higher and just couldn't. So IWM, precarious. IWO, again, same exact chart, right? IWO, IWM, same exact chart. Maybe a little bit of a double top looking ish right there. I mean, if you really want to stretch it, but in a range, and this is the area that's got to hold. And so far it has held. This 277. So that's IWO. All right, looking at XLF. XLF, holding up better than most, because it's just kind of back here retesting this area. Not a huge amount of give back yet. But if it breaks this area, then we're back in this range right here. And that's a big deal, right? So again, right at the cusp of a potential breakdown. If it bounces here, that's great. So again, it's right at that place. It could go either way. SMH, this looks like a lot of choppy potential distribution in here. I'm not a big fan of this chart right now. I don't like the way it looks. I don't like that price is below. We're going to get this bearish cross, as a potential area. This, I don't like how this went straight up, and then you get this choppiness in here. This looks like distribution to me. And so SMH comes on back in, 275 is the first spot. And then, maybe 257-ish, 256, 257, somewhere along there. If SMH decides to come back in, I think that's definitely a bearish sign for the market overall. Looking at wood, we're still in this range, so there's not much of a signal. I'm just gonna make this a little bigger so we see. So you had a VWAP anchored from the beginning of the year and from the absolute high, and they're in the same general area right over here, which is where price got rejected against. And so we're still in a range, right? A breakout. I think the bulls have the ball. Again, it may come down to the bottom of this range, a breakdown though below here. And I think the bears definitely have the ball for a little bit longer. So no real signal there. Just got rejected so far at this area, which happens to be the VWAPs of significance. Bond yields. This is kind of interesting. So line chart and shut off these moving averages. So we don't care about that. Okay. So here is bond yields. Government bonds versus high yield bonds or junk bonds. And so this is just a relative strength chart. And I want to focus on this area right here. So as you can see, we had this kind of pattern, came back in, looking like things were going to get better, got choppy, and then boom, right back up. And then let's look at this area right here. And it had a very similar kind of look to it here. Again, this is a little bit more drawn out, I think. How many weeks is that? From here to here is 17 bars. From here, I didn't do that right, but that's fine. It's about 14, 15 bars. So, okay, not that much more drawn out, but they look eerily similar to each other. So again, no confirmation yet. Again, I need to see something like this to get me very bearish. Not quite there yet. Is it the start of it? Maybe, I don't know. Could be, right? It's just not quite there yet. But it's definitely something that is like, again, on the cusp of potentially, maybe going to happen. 152. It's always been the range. It's been the range for a long time. A break above 152, especially something that looks straight up like this, that's something that gets me very bearish, right? That's very, very bearish and potentially short, right? Because you could get this, which is really bad. So bond yields, definitely something to watch. Again, under the surface, things have been really rough, and we're going to get into breadth in a few seconds. But let's look at the VIX. VIX is still tame, right? At 21.5. I mean, it's not 16, 15, but it's not 30 either. So it's tame, right? And I think that's maybe a problem, because under the surface, there's a lot of issues, and the VIX isn't reflecting it yet. So, I mean, it is what it is, right? And let's look at the VIX in, 26.5. Again, and it's showing a little bit more of issues going on under the surface. But again, not too bad. Put call ratio. Let's see how sentiment is. And not overly bullish, not overly bearish. This is 1 foot in the door, 1 foot out of the door. I'm looking for signs of this for bottoms, and we're not quite there yet. We're just chopping in the range on the put call ratio, and so no real signal here. Again, I would love to see a spike in here, because that could be a contrarian spike to get long, right? So there's your put call ratio. All right, and those are some breadth stuff. Value line geometrics index, kind of similar look to the IWM small caps. False breakout, came back, retested the bottom, and now looks like it's trying to roll over. Again, it's in a range as far as this breadth study goes. But if you look at percent stocks above the 50-day moving average, you can see just this deterioration that's happened since early December. All right, so the low here was about 22.59, right? And we're at 26.67. So only 26% of the stocks are above their 50-day moving average, and looks like things are declining. So that is definitely not a positive for the stock market, right? That's a deterioration in breadth that we are seeing. Gold. So let's go to the weekly chart. And gold, again, is it trying to make this right side of a shoulder? It's just not there yet. This is a weekly chart, and I see lower high, lower high, lower high. So this lower high would have to be taken out, about 174, 175, we'll call it. And this downtrend line would then have to be taken out. If that happens, then potentially gold could be in play for a much, much bigger and sustained move. Not quite there yet. Also, as an indicator, which is how we're using it today. So we do see higher low, potentially higher low here, right? So if people are going to start rushing to gold, and we start seeing moves like this and like this, then potentially that could be a risk off. People are getting bearish. More problems are happening in the market. So definitely watch gold. It may give some clues going forward. And then let's look at Bitcoin. And Bitcoin right here. And here's closing prices only. And you see we're in a range in Bitcoin, but definitely a downtrend from the highs, which were back in November, right? November 8th. And if people were risk on, this being the riskiest of all assets, things should be breaking out, right? And they just weren't. You get the false breakout here that everyone got really bullish, including myself. And then it just kind of fell apart, and it's been stair stepping down ever since. Lower highs, lower lows, the whole entire way. The whole entire way. I'll put a view out there just to see what it looks like. I'll just leave that on there because I think that's important. Yeah, from 68,000 almost, right, down to 47. It's a pretty big drop. What is that? 30% drop. It's a good size drop. And it may not be done yet, right? It may need to come all the way down here and test this 41,000 area. But as a risk on, risk off, again, if things were going to be really, really bullish, we should be seeing the highest, the riskiest of the assets moving higher. Just not seeing that right now. So, and we're not seeing that in growth stocks either. So in the end, potentially head and shoulders topping pattern looking like here on the Qs. A lot of things that are in tough spots. A lot of, IWM being probably the biggest one right here. If this rolls over and we break out below 208, yeah, I think it's a big time risk off assets. I think if IEI, HYG, I think bond yields ratio ends up looking like this, that's definitely risk off. So those are the things I'm watching next week and in the next few weeks, right? Because things are going to get weird next week because you're going to have people starting to go on vacations for holidays and so on and so forth. So yeah, things could get a little bit, thinner trading volume potentially. So just be aware of that. All right. Hope you all have a good week. Stay safe out there. I think it's a time to be defensive, right? It's better to keep your cash and not, not worry about this type of stuff, right? Because maybe we come back, test us, and maybe we bounce here, but hopefully the signs of a bottom will be in here and we'll see this move higher. Again, this is another one I'm watching right here, right? $81 has to hold on the equal weight Qs. That's another big sign, big tell. So IWM's got to hold, QQQ equal weight's got to hold, bond yields have to settle down and not spike up. A lot of stuff to be watching right now. All right. Hope you all have a good week and you'll take care. Happy holidays.